Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Thursday, July the 15th. The year's 2021. Let's talk trading. Line in the Sand, Part 4 with Walmal. This video is for educational purposes only. Your results may differ from mine and from Walmal. Walmal, we ran up against that 15-minute time limit when you were here for Part 2. So we've been talking about lines in the sand, and yesterday I went over the buy zone and the rat zone and the wick zone with the fellow traders to show them that some of these lines stay put and some of these lines move based on which method you're using.
Yeah, that's exactly right. You know, the line in the when we use that term "line in the sand," it's sort of like, okay, this is a demarcation point where we are going to say this line is a permanent line. Boom. But in trading, there's different ways to define that. There's certain types of trades, like the DSR trade, as an example. That line in the sand does move because it's dynamic and it moves from time to time, and so you're trading more moment to moment, and you have to make your decisions sometimes right then and there on the fly. And if you're not the type of person who's quick on your feet to be able to go and do that, well, maybe that's not your method. Maybe go into a buy zone where the reality is on a buy zone. I mean, it's there. It's gets put in basically the beginning of the day, and it's there until the day's over, until the next day comes along. And so that may be the type of thing where you can go and do that. The great thing about that type of trade, and you teased me about this a little bit earlier today. I missed the trade, and I went and said, "Drats, I missed that trade." And I've been waiting for that trade, for the last 15, 20, 30 minutes. So, and you said to me, "Why didn't you put your pending order in?" And honestly, really didn't have a good answer for you, other than I didn't do it, forgot to do it. Well, the nice thing about some of these trades, like a buy zone trade, is the type of thing where you can put that in there and way ahead of time, and that way you don't miss the trade. And it sets itself up for those. Some traders like to go and do that set and forget type of mentality. And I don't. That may work for some people, may not work for other people. It just depends on who you are. For me, sometimes it works, sometimes it doesn't. I like to trade more, in the moment. I like to go and see what price is doing, get a feel for what the market's doing, and based on that, I like to go and pick my lines in the sand, so to speak, at that moment in time. My lines in the sand are just that. They're lines in the sand, so to speak, where the line gets drawn in the sand, but I can take my foot and sweep that line away, or rather, the market can sweep that line away and move it to another location. Now, the thing is about making those type of trades is that you need to be a person that's willing to take some losses, because you're going to take some losses with that type of trading, because the lines are constantly moving on you, and because of that, you need to be able to quickly assess what's going on, make your decision as to what you're going to do, and move on. And if you can do that, you can do great. If you're the type of person that can't do that, that doesn't mean that you're less of a trader. It doesn't mean you're less smart or whatever. It just means that, hey, the reality is I just can't go and do that for whatever reason. That's just not me. So I need to go and figure out something different.
Exactly. In fact, we were waiting for a price to go below the 40 and catch the 40 on the upside. Well, it didn't do it on my chart.
Yeah, it's funny. The funny thing about it is that when on my chart, it didn't do it either. And in fact, I'm looking right now to see where it actually got down to. It got down to 41. It never made it down to 40. But we both went and said that, that's a good place for that thing to turn around. And I think I actually said to you, I'd prefer for it to actually go and have a 5-minute candle close below the 40 and then take the pop above the 40. Even though that's this hour, that's a Walmal short trade, I think that's a good place. And the reason why was because if we go back a couple hours, and this is what we're talking about, going back and looking left, that's part of the factor of this trading thing. If you go back 1, 2, 3, 4 hours ago, okay, there was a huge huge M5 candle that ran up 40-something pips, and we know that return bars get filled. So I wanted a M5 candle to close somewhere around 36, 37, something like that, because that would have completed that bar, and then I could have gone and jumped in when it came back up across that 40, jump in, because the other thing I know about return bars is, one, they like to go back to the open. And the second thing I know about them is that once it does complete it, it likes to run back up, and sometimes as far as the midpoint of that return bar. Usually not in one candle. Usually in 3, 4, 5 candles, 5-minute candles. But it likes to go and do that. The market just tends to do that. That's one of those things where I don't have a way to statistically prove it. That's just something that I've seen observationally. So knowing that, I was like, okay, I can go and take this idea of statistics and know that candles like to run X number of pips in an hour. I can then, in addition to that, know what I've seen observationally from the past, put the two of them together, and I can go and put a line in the sand, so to speak, saying, okay, I'm going to wait for that thing to close below it. Hopefully it goes and hits it. As soon as it closes, it hits the bottom of that, or hits the open of that big return bar, I'm now going to go and put a line in the sand. I'm going to put a buy at the 40. And, that would have been a really nice trade, except for here, it just didn't get down that low. Am I upset? No. Why? Because my trade, it would have been nice to pick up those, how many pips could I have picked up? If I just would have gone and just randomly took it at the 41, I could have gone and picked up, 11 pips? That would have been really nice to pick up 11 pips, but the reality is that's not my trade, and so that's not my line to draw. Now, some of the other traders out there may go and look at it differently, and that's the whole thing. I know there was one trader out on the Facebook page that was, talking about statistics and what are the statistics really measuring. Well, he's right in the sense that it's not taking all the other factors out there. There's an X number of other factors, and he's exactly right on that, because I don't know if we can statistically go and take in all those other things, but what I can do is say that I know that the pound likes to run this distance. I can go and say that I know that the pound likes to go back to the open of return bars. I can go and say I know that when it does do that, it tends to run back to the middle of that return bar. And I can take those things into account and then go and place my bets, so to speak. And that's just how I trade. And I know it's to one sense it's in the moment, but the thing is, if I go out there and say, hey, I'm not looking to go and make the world, I'm looking to go and make a living. I eke it out. I know TR, you like to say, stacking bricks. Pick up 100 here, pick up 200 there, pick up 100 there, that type of thing, and you just keep on doing it. Well, whatever your goal is for the day, you can pick it up relatively easily. Are you going to get some losses in that? Absolutely, you're going to get some losses. But that's just the way I trade. And that's how I draw my lines in the sand.
Yeah, because right now, anything can happen. We still might get that 40 trade.
That's exactly right. And that's the thing. This may go and drop down. I know in my heart of hearts, I know that it's going to get down to 36, because that will complete that return bar. It does it. Now, do I know it's going to happen this hour? Nope. Do I know it's going to happen next hour? Nope. Do I know that eventually it's going to happen? Yes. And that's just what you have to go and do. And that's why I go and place my lines in the sand. My lines in the sand in that fashion. I wait for that to occur, because then I know that sets me up for what happens usually next.
Yeah, well, the thing is, do we know it's going to get there? Well, we don't know, but we've, statistically, yeah. But, price could turn right here and go up and never see this for the next, till
3 years.
For years, for decades, or forever. We just don't know. But that's why it's trading, because we don't know. It's speculation. Some people think it will, some people think it won't. Hey, we got a market.
Yeah, exactly. And that's the thing, I know last time on the last video, I talked a bunch about the idea that, you got a line in the sand where you're going to go and get into your trade. But I said the most important line in the sand is where you get out of your trade. That's the biggest and most important line in the sand. And so you take the chance. You're speculating. You take the chance, and you're making sure that you don't get hurt, and you should be okay. And at the end of the day, you should be okay, as long as all your other reasoning makes sense. And that's the thing. You got to make sure it makes sense. You're not doing airball trades. You're not taking revenge trades. You're waiting, for those things that pop up on the screen that makes sense and say, hey, look at price. Price over the last 3 hours, going 4 hours now, has been running down pretty significantly. Does that, it hasn't finished off that return bar. Well, there's a good chance it's going to go down. You may want to go and take the break of the, the 40 just to go short and try to pick up 4 or 5 pips. You may want to do that, but know that, that's probably a little bit risky, but there's a good chance of that. But at the same time, if it does go and do that, and now it starts to return back the other way, well, now we got another thing in place because we know that it likes to run back to the midpoint of that return bar. So, you got to go and figure those things out, and just place your bets. I hate to say it. I mean, it sounded very cavalier about it, but that's the reality of what we're doing. We're placing our bets.
Yes, we are. So it's like, did you take that bet that breaking out of the previous H1 low at the 38.42 level?
Right, exactly. I mean, earlier, before we even got on this phone call, I did take that, and I made a little bit of money on it, and and then I went and actually took the bet in the other direction of going long a little bit off of that, off that same exact level, and I just went and took the chance both directions. And, one of them I made a little bit of money. And in fact, I was discussing with you on the phone before we got on the video. Hey, I went and took a small loss on this one, but I took 2 wins in the other direction. Hey, that's just that's trading. So by the time it was all said and done, I think I was up like 1.5 pips, 2 pips between my loss and my 2 wins. Okay, I'll take that, because, trading, I'm not looking to go. I know some people expect this to be a money-making machine where literally you walk in, spend 15 minutes in front of your charts, collect a paycheck, go home and go and do fun stuff. No, I'm actually working here, and that means sometimes I'm starting at 5 a.m. in the morning and not finishing until 11 or 12 o'clock in the afternoon. That's just what it is. Other days I will go and say that, hey, there have been days where I jump in and first 15 minutes I'm done for the entire day. But that's generally speaking not what happens in trading.
No, that's because you're an addict.
Well, that's true, but I think it's more of that we have to work, we have to, we need to go work. And, if I had an unlimited account, yeah, I could definitely get done in an hour. Or less, because I could go and take on huge, bigger risk and not have to worry about it. But I have to take into account, that's kind of funny, but I need to go and make sure that I don't go blow my account up. Yeah, I know that there are times where it's like, I know this is coming back. It's just that it's going to have to run 30 pips against me before it does. And if I have too big of a trade on, I just got to take the loss, and wait for it to come back and just whittle away on that loss and go for it. I can't go and have that line in the sand of my stop loss too far away. But if I had a $50 million account sitting out there and I'm only trying to make $1,000 a day, let's say, I can take those risks because it's not going to matter in the long run. Because I still have to have a line in the sand out there, but I can have it a whole lot further away.
Right, and right now I'm noticing price is within 3.2 pips of the weekly pivot at 38.43. I'm wondering if that might be one of the reasons why the buyers are putting up some resistance right there around that 40 line.
Yep, and we're also very, very close to today's open. We're not at it, but we're within 10 pips of it. So I'm sure that's putting pressure on it as well. I do know that there's some news coming out later today, but I didn't think it was very significant. But that always plays into it. It's all these different things that that cause the price sometimes to just compress down and have some trouble sometimes. But the thing is, you got to be ready for it to go and do whatever it's going to go and do.
Yeah, and so guess what? The fastest 15 minutes in trading's up once again, traders. So I hope this discussion this week on the lines in the sand have helped you. In fact, one trader said he's doing nothing but the buy zone, and he wish he'd get more losses because it's just getting too easy for him.
No, he doesn't. No, he doesn't.
So anyway, just remember when you're sitting down at your trading platform, it's not what you trade, it's how you trade it. So go out there and drain the banks. And once again, if you're on Reddit, join that My Never Lose Again subreddit. This is the Rumpled One, over and out.